Very glitchy today. Good to see you. Bob, you're killing me with this guitar, man. What's she doing back there? Gee whiz. Guten Morgen, Jumbo, Nihama. Salam, my good friend. Good morning. Yeah, very glitchy today, but I'm glad you were here. We got CPI coming out in 20 minutes. That's pretty much the whole day. That's the plan. So welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we want to do that? Well, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small. Stay humble, focus on the long term, never risk money, cannot afford to lose. Bonjour, buongiorno. Ciao. So nice to have you here. We can do CPI together. We could look at headline. We could look at core. We could look at super core. Cool. So another reason to get out of bed and do what needs to get done. Camera's weird. Remember, the camera wasn't even working yesterday. Now the Zoom is weird. Anywho, good to see you. Good to see me. All right. So, yeah, CPI will come out. We will trade that together. Great. Ask questions, get involved. Let me know how I can help. A few things to point you to get today going. Let's go to the live stream for that. People have requested, and I have agreed to, do a third quarter global market outlook, planning the next 90 days of trading in advance, using economic data, macroeconomic data, fundamental analysis, but also behavioral finance, economic data, and high frequency data can go into this. So there's a lot. It takes me quite a bit of time to put these together. You asked for it, so I did it. So now you need to follow through and sign up. It'll take place Tuesday, so less than a week away at 10:30 in the morning, New York time. So that's late afternoon for you Europeans. So you can get this done and then go to the pub. The recording will be available for 2 weeks, and then it will be destroyed. You do not need to be a member of Quant-in-a-Box. You just need to sign up. Easy peasy lemon squeezy. I do invite you to join Quant-in-a-Box. We did our video today already. We've already planned out today. And there's some pretty amazing things I'd like to point you to. The new dashboard is awesome. So let this load. Again, we're logging into the Google Cloud. This is a live database. You can see it's actually processing. Cool, so here's the new dashboard, which is phenomenal. It's giving you this real-time data here. Okay, it's looking at a daily bias, risk on or risk off, based on how the market's behaving. Very similar to what the scatter plot's doing. It's not economic data. This is now market data. See, before Quant-in-a-Box was all economic data and comparative analysis of economic data. Well, now it's economic data and market data, which is awesome. And then you say, well, how does it calculate a daily risk on, risk off bias? Right now, it's just slightly bullish, but neutral. Well, let me show you how it does it. Why won't it scroll up? I guess here it is. So it now does this for daily, weekly, and monthly risk on, risk off bias. It's doing it in real time by looking at the S&P 500, yen futures, gold, the yield on the 10-year T-note, the dollar index, and VIX. Creating a basket of them and scoring them on 3 different time frames. Wow. Wow. Okay. Cool. So that's really nice. But let me show you something that you probably haven't seen. This was released this morning. It's now looking at central banks around the world and projecting their interest rates and inflation a year in advance. For example, let's take a look at the United States dollar. Projected inflation out to third quarter and fourth quarter of 2024. Sorry, interest rates, I should say. And over here is inflation levels. Here's pound. Okay, here's Australia. Now, how do we get this information? What is it doing? It's actually talking to those central banks. This is the central bank's own projections for their own economy. Okay? Amazing, right? So here's their interest rate forecast, and here's their inflation level. Now, the question is, what does it mean? Well, here's a nice way to visualize it. So let's look at New Zealand. It's very similar to this. So this is where we are now. They're going to raise one more time, then they're going to pause, and then they're going to start cutting. Now, how aggressive is that cut relative to other central banks? Gee whiz, you ask good questions. Not only are they going to raise and then pause and then cut, how does this compare to the other central banks? Good question, and that's the answer. They're going to cut next year way more aggressively than all the other central banks. Switzerland is going to, still be high. Euro is not going to cut at all. Japan's not going to cut at all. And USD is just going to start that process. But New Zealand's going to be slashing and burning, baby, according to their own outlooks. Oh, God, isn't that wonderful? Isn't that beautiful? Nice. It's beautiful, huh? I know. So that is already launched. Okay. So the central bank forecasting tool is already launched on Quant-in-a-Box Pro. The risk gauges are already launched on Quant-in-a-Box Pro, and the new dashboard is already launched on Quant-in-a-Box Pro, and there's more and more coming. So anyways, I wanted to point that out to you. If you're wondering about FX Bootcamp, it's now Investor Bootcamp. It's still $88 a year. All the training courses are still there. The day trading groups are all, and the swing trading groups are still there. The charting tools are still there. We're just now expanding into other things like personal finance and real estate and venture capital and hedge funds and all that kind of stuff. And, oh yeah, there's the book I'm writing. Yeah, that's the book I'm writing. And it outlines, for example, the day trading group and the swing trading group. Okay, before you had to get behind the paywall to learn about that. Now it's up there and up front. So very cool. And then I want to point you to tradersway.com, a trustworthy, ethical foreign exchange broker. Yeah, that's enough. Ethical, trustworthy. They earn my loyalty and respect. Their service is fast, right? They got good execution speed. The fees, whether you do ECN or variable account. I like the VAR account, but whatever, you might do ECN. Their fees are competitive. Yeah. They're great. I recommend them. Go check them out, tradersway.com. The back office is beautiful and clean, well organized. Okay? So anyway, so I don't use the ECN account, but you can. Okay? I like the variable spread. I'm old school. That's what it was back in the day. Okay, and there's me with my Porsche, which I think is really funny. I'm like, what are they going to do if I sell my Porsche? I was thinking about it. I was thinking about a Mercedes G63. I think it's an older one. G63 Brabus. I'll have to change that to a Mercedes. Anyways, yeah, tradersway.com. They're great. And if that doesn't convince you, then I think they're above average good looking people. They're tall, thin, and pretty. So check them out, man. Do your own due diligence. So I'm watching Bitcoin today for a possible risk on move, which reminds me I got to bring up a different website. Hang on. Because I have a cash position going. Hang on. I might have to get out of this quick today. Okay, we'll leave it there. So it's been pretty stable, but I benefit if this goes up. Let's just put it that way. So I got to keep that. If this collapses, I need to get out, and I need to get out quick. But I guess even that being said, if it spikes, I'll probably want to get out and get out quick. But here's the projection for today. What do you guys think? Smell like a decent plan? Yeah. Daniel's still in Toronto, it looks like. I hope Canada's treating you well, my friend. Speaking about friends in Toronto, I have a friend in Toronto. He's a big banker there at one of the big Canadian banks. And his son goes to a fancy pants high school, and he just graduated with honors. And like the Canadian Parliament gave him an award. So his mom is in the Canadian Parliament with the son, getting pictures taken and stuff because it's a huge honor, right? A national award in the House of Parliament or whatever the big, beautiful room is. And meanwhile, the daughter is graduating with a degree in medicine and surgery in the University of Glasgow. So she graduated from high school and went straight to Glasgow 5 years ago. Now she's got this medical degree, graduating with honors. And so they're 24 hours apart. So mom's got to be at the House of Parliament to get pictures. And then he's got to be in Glasgow, and she's getting her degree and her honors all at the same time, basically. And so that family was spread thin. So it's some really happy and proud Canadians. Yeah. He's got great kids. They're wonderful kids. Yeah. So anyways, lots of very proud Canadians. Yeah, which is great. So anywho, up and up and up and up. I look at this 15-minute chart. It's still bullish, so I'm okay with that. Everything's good. It all comes down to CPI, right? So we want to look at headline, which would probably be lower. We want to look at core, which would probably be slightly lower. And then we want to look at super core, which is probably unchanged. And you're like, where do you get super core? You have to analyze it. And you're like, well, what is super core? Well, Jerome Powell explained this about 3 meetings ago. 3 central bank, right? 3 Fed meetings ago. He said that's what the FOMC is looking at. And also, they don't look at CPI. This is kind of the interesting thing. The whole market's ready to freak out today. Well, the Fed has already told us they don't use CPI, they use PCE. But all the media has hyped up that the Fed is watching the CPI today, in particular core. Well, that is somewhat true. They are watching core inflation, but technically they're watching super core inflation, and technically they're watching PCE, not CPI. So they're kind of like, the media is somewhat correct, but also somewhat incorrect. So be careful who you listen to, huh? You guys doing good? Everybody happy? Did you sign up for the Q3 presentation yet? Come on, we're just waiting for CPI. You got time. Oh, Stevie likes it? You like the tie? Yeah. It's bold to go print with, with pattern, print with pattern or whatever. A little bold, but I think it blends in okay. A little gold and some blue. That's all right, huh? What are the dynamics of supercore? Okay. Let's do that. Let's, what do you guys want to watch? Euro dollar? Yes, we could. Okay, so you have inflation. Inflation. That's headline. Okay. Minus food and minus energy. Energy. Okay. That is equal to core minus housing, which is rent and owner equivalent rent. Okay, and that's super. I think there's a little wage or something in there, but we'll dumb it down. Okay. How's that, Bruce? Okay, so inflation minus food and energy is core. Core minus housing is supercore. There might, like I said, there might be housing and wages, but wages is indirectly covered here, but in PCE, it's in there, but anyways. The thing is, housing, I think, is about 30 to 40% of inflation. And that's sticky because you won't want to sell your house. Okay? And rents are not going to come down. So no sell. So prices can't come down unless you sell for a loss. Why would you sell your house for a loss? Remember, that comes from people that need to buy a house. Okay, a year ago they could have got a mortgage for 3.5. Now the mortgage is 7. So when you show your debt to income ratio to a bank, 2 years ago they'd give you $1 million as a mortgage. Now the same person only qualifies for a $500,000. So you might be just as rich as before, but you're not as wealthy as before. So suddenly less people can afford a $1 million house than before. So if you're trying to sell your $1 million house, there's not many people that want to buy it. Because remember, people buy based on what they can afford, not the interest rate. So they can't afford it, so you got to bring your house price down by almost 50%. Well, why would you do that? Only if you're desperate. You've lost your job and all that kind of stuff. But most people are not there, so you would never sell. So that ain't going to happen. But if you did sell, you would probably have to lower your price. And that lower the price would, okay, lower inflation and core inflation, okay? But super core is minus, okay? The other thing is rent. Why would a landlord lower rent if inflation's pushed up the cost of insurance, pushed up the cost of electricity, pushed up the price of water, pushed up the cost of maintenance, pushed up the cost of having the lawn mowed, cost of insurance. And then if you have to roll it over, especially if you're thinking a year or two down the road, you're like, I have to roll over my mortgage and it's going to cost me twice as much. There's no incentive at all for a landlord to lower rent at all, unless you have 30% occupancy, which isn't going to happen. So, that's very sticky. So now the Fed wants to cut housing out of the equation, cut energy out of the equation, cut food out of the equation, and say, see, look, inflation's down. All right, so if someone's got the number, let me know. In the meantime, I will get ready to actually go through it with you. The Bureau of Labor Statistics. Okay. Do. Okay. Well, I don't look at it that meta. I know what you're saying, but they're trying to figure out where the inflation is. Okay, so I know what you're saying. I don't look at it that way, but okay. So CPI, all items 0.2. Shelter up. Boop, boop, boop. Okay, hang on. This is going up. Okay, we just hit a risk zone. I forgot. I keep forgetting. I need to watch my Bitcoin. Sorry. S&P 500 up. My Bitcoin's up. Nice. Oh my God. Hang on. I want money. It's dag. Boom, boom. Hang on. Sell Bitcoin. How do I do this? One time. Sell it. Sell all. Ugh. Cool. Nice. Skippity scalpity. Easter's on its way. Meta says, yeah, on those items is where the inflation is. But when you're breaking it down, Meta, you're finding what is moving, what's not moving, right? So food is down. Energy is down, right? But anyways. Good. So sorry about that. I had to take care of some, Papa had to do some beeswax. All right. So I got that done. Oil. Okay. We do have a breakthrough. Okay. We do have a breakthrough, and that's starting to happen. By the way, so if I go to the Pro, let me bring QB Pro. One thing that's changed, and I launched this yesterday, we go to market analysis. No, fundamental analysis, sorry. And then what used to be called the Smart Money Tracker doesn't really describe very well what it is. So I just changed it back to, it's the Commitment of Traders report. You You guys ready to see the COT report under Quant-in-a-Box Pro? Oh God, as Kanye would say. Look at my motherfucking click, click, click. All right, look at that. Beautiful, right? And so we're looking at oil, and what you're tracking is where oil was and where it's going. Oil was way down here, and look, week over week over week, it's moving more and more bullish. And now the new report is much easier to read. And look at all the contracts rolling into oil. Look at all the contracts. Institutionally, boom. Okay, money's moving toward oil. Okay, and this right now is set on euro dollar, but I'll just leave it this way so it's easier. Primary is euro, secondary is dollar. So now I've ripped apart this pair, and what you see is, right, traders were long, many more traders were long euro until about a few weeks ago. And suddenly, steadily since the middle of May, steadily the number of contracts long euro has fallen. And then since the middle of June, the number of contracts long USD has steadily increased. Well, over the last few weeks has been flat, but nonetheless, this creates a negative bias, shown here, negative bias, which means euro dollar down based on positioning or change in positioning, but nonetheless, euro dollar is still up. So this might give you a heads up where maybe at some point when euro dollar runs into hardcore resistance, this is more apt to collapse because institutional investors are already positioning for a drop. Isn't that cool? Look how beautiful that is, huh? It's gorgeous, gorgeous. So anyways, lots and lots and lots and lots and lots of changes going on at Quant-in-a-Box, and it's beautiful. So anyways, I want to leave it on the risk gauges and see if these end up changing today. Cool. So just a wonderful sneak preview, right? Made us like, and that's why it's ranging. Yeah. Now we know. But anyways, here's my oh my WTI. So we've been seeing over the last few weeks a shift of bearishness in oil to bullishness. Now, technically, we hadn't really become bullish, but now we can see the institutional positioning since here has actually been changing. And so fundamentally, it was more bullish. And so now you can use your technical analysis, and maybe you buy a dip next week, and maybe we're on our way to 80 or 85. Could be a rabbit, could be. Okay? Luis is like, the sky is the limit on SPX. Yeah, I did a stop, look, and correct session yesterday at Investor Boot Camp, and we specifically looked at the S&P 500, and it looked like there's lots of reasons why it might come down, and I said, but there's no technical reason for it. There's no way to confirm that. I said, get out of the way. If you want to short this, you need to wait. You're way too early, and look at this. And it's rocking and rolling to the upside. Yeah. So I think that was good advice. Even if you can name 15 reasons why you think there's risk in the S&P 500, you can't confirm it with technical analysis. So it might happen in the future, but it ain't happening now. And so I said, if you shorted it, and so the question last night when we were here, should you short it if you're a bear? And I'm like, well, I see the technical top. I see it. I don't disagree with it. And that's a great selling pivot. I totally agree, but it's too early. You can't confirm it. And I said, if you did it now, it'd be a guess. It'd be a bet. I bet you that's the top. Well, I don't bet. Okay? I'm actually market neutral right now. I don't get hurt if the stock market goes up. I don't get hurt if the stock market goes down. My minimal performance will be 10% income this year. No matter what happens, I'm going to earn 10%. Now, if it goes up, I'm going to earn more than 10%. If it goes down, I only earn 10%. So I'm tickled pink. That makes me so happy, and I'm not even joking. I dream about it at night. I don't know what you dream about, right? We all dream about different things. I asked my wife the other day, I'm like, oh, yeah. And she told me she had a dream. I'm like, oh, well, what did you dream about? And she's like, I dreamt that I married Ryan Reynolds instead of you. I'm like, ooh. that's something. Yeah, okay. Well, at least he's Canadian, right? Cool. I dream of the market, which is kind of interesting, huh? Yeah. Okay, your customer says, if inflation is down, then why did gold shoot up? Because by the way, I covered this a million times at boot camp, right? So you need to have this down. What's the behavioral finance? Less inflation means the Fed doesn't have to raise interest rates as high 6 months from now. Therefore, the disinflationary pressure of 6 months from now is lower. Well, truth be told, I dreamt of marrying Ryan Reynolds as well. No, that's not the truth, but it is pretty funny. Yeah, me too, baby. Me too. That would be so funny. All right, so still up. Still up. Okay, this is nice, but what's even better than this? Insert indicator custom. Price action pivot points invented by Wayne McDonald. Yeah, I invented this. It's like my baby. I didn't know it, but it's my baby. Okay, flat right now on the short run, but then I go insert indicators, custom, price action pivot points, and then I'm like, give me the long term. And then I'm like, insert indicators, custom. I'm about to blow your mind. Grab your mind, everybody. It's going to explode. It's going to explode. Price action on 3 time frames on 1 chart. Okay, so we have long and short-term congruency. Oh, God. Yeah. All right. I want to calm some of this other stuff down. Pivot points new. Might want to change that to 2. No, it's all right. And change that to 2. We don't need so many lines, right? All right. And then, of course, all this is what I've drawn. So we can clean that up. We don't care about that anymore. Delete. All right, how many people have Googled Ryan Reynolds in the last 5 minutes? Come on. I know. All right, so anyways, we're Oscar Mike. Cool, right? Cool beans, right? So making a higher high and riding this up. Long term up, short term up, medium term neutral. This is all technical analysis, and it's very similar to this, which is also market analysis. Okay. On that time frame, and I love that time frame. Okay. We're hitting the daily target, by the way, just so you all know, all y'all. Coolio. Okay, just watching all these, just watching them all. Okay, we've hit that target for the day. The other thing you want to keep an eye on is where's the top. Whoop. Okay, that's a big number, right? We're on the weekly target, we're on the daily target. Don't turn your back on that, that's important. Boo, 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 boo. What's going on? Nothing's right, I'm torn. All right, let's just, it's moving beautifully. We're right in that. So I would tell you that this is bullish, but you should start being cautious using the leading indicator of daily and weekly pivots. So it's a short to medium term caution zone, huh? Luis is going to the next one, right? Yeah, that's fine. That's just slightly longer term. Yeah, and that is 45.83. Yeah. Yeah, cool. Yeah, so the stock market's not even technically open. That's the continuous contract on futures. Well, let's take a look at where did it go? Here it is. Bum, bum, bum. So headline is up. Okay. Headline numbers 3.0. So how does that look? We'll get to that in a second. Well, I guess we'll just do this. Okay, let's break it down. Do our core, super core, and all that. 3% inflation in food. Okay. Or sorry, all headline, sorry. Headline is 3. When you look at food, it's 6. Okay. Energy down almost 17% year over year. Gas is way cheaper. Fuel oil is way cheaper. Cool. Electricity is flat. No, all energy, right? Electricity is slightly up in the United States. Nat gas is cheaper. Okay? Now, core. Okay? So you got to start here. Core inflation is slightly below 5%. Used cars are actually down. Remember how this was way up? Travel was really a big thing as well. And that's up 8, but I think it was up 20. And I think used cars were up like 30% or something crazy. Okay, shelter. So this is rents and owner equivalent rents. 8. So rent is still high. Okay, but this has changed a lot. Yeah. -5. But anyways, rents are still very, very high. Travel's pretty high. Although I can fly to Cuba for $180. I checked out the hotel room, and as I suspected, and you see this a lot in the world, there's 100% inflation in Cuba over the last 6 months, but the hotel is exactly the same price. So I have to pay the same amount of dollars, but twice as many Cuban pesos for the hotel. So the dollar is stable. The Cuban peso is not. But I reserved dinner at I think the coolest and one of the nicest, if not, I guess the nicest restaurant in Cuba, in Havana. Dinner at 8:30 on a Saturday, and reserved. Didn't have a problem. I thought there might be a problem, but Maida's like, yeah, food is not cheaper, rent is high. Yeah, that's real inflation for sure. Oh yeah. I mean, when you think of it, 6% inflation, 5% of it at the grocery store, and then almost 8% at the restaurants, huh? What's it called? I don't know how to pronounce it. It always makes me think of LaGuardia. LaGuardina? You know which one I'm talking about. It's in that rougher part of town, but it's an amazing place. Yeah. And it's really cool because the interior is like undescribable. But they have an outdoor patio, and then there's another outdoor patio, and then way at the top there's a rooftop bar where you can have a cigar and cocktails. So yeah. But I think I'm going to take my dad. I'm going to ask my dad if he wants to go. I'm like, come on, Dad, let's go. But I'm very interested as economist, like this hotel. There's inflation, but the hotel's exactly the same. How come my hotel room isn't 50% cheaper, right? So anyways, I want to see what's changed and what hasn't changed. And I like talking to people too, but, right. Yeah, let me go back there. Yeah, so that pound is great, isn't it? Let's go back to that pound. Yeah, so yes, well, so what I was trying to explain to somebody, and maybe it was boot camp or something, the value of the peso actually hasn't changed. So like you said, the government is, has got a stable exchange rate. What's changed is Cubans desperately need hard currency. It's the price they want to pay for a dollar. They want the dollar. They need the dollar. Now, it might be something as simple as, holy crap, we got to get out of this country. We need to go to Miami. Well, it's $10,000 to get to Panama, and then from Panama we got to go to this other place, and like they need $10,000 because whatever means they need to pay, it needs to be in dollars, and they're like, we need to get the hell out of here, right? So they need the dollars. And that's the going market. That's just, you don't control price. So that's just like there's a demand for dollars, but peso is actually the same. And so when I go around, there might actually be everything is the same price. And I look on the street and I'm like, where is there inflation? The inflation is the black market on hard currency. Canadian dollars, euros, USD, whatever. Okay, so it's interesting. I need to observe it. And if I end up pumping some USD into the economy, then I'm doing my part. Andrew says, looks like your high volatility event-driven strategy also works on CPI. No, it's a high volatility event-driven strategy. It works in all high volatility events. Okay. Yeah. Cool. Now, we'll see. So we still have inflation, but we still have to analyze whether we want to own this or not. On the 4-hour, what's happened? Let's take a look on here. 4-hour is technically bullish on gold. It was bearish, kind of neutral. Now it is bullish. If you were only going to look at this time frame, you could be in the business of buying dips. You can. You have permission. Yeah, totally. Just like the advice I gave last night in the analysis of S&P 500, you might have plenty of concerns about the economy and about the stock market. Great. But when you look at the chart can't confirm your concerns yet. So do not bet on what you think should be. Technical analysis tells you what is now. So if you think what should be and you can't confirm it, then maybe you're right. You're just not right now. And that's how you need to look at technical analysis. So if the stock market's up, it's up. It doesn't matter what you think. It doesn't matter what should be. It doesn't matter right or wrong. Okay? It's just what is. It's like in war. It doesn't matter who's righteous and who's evil. If you're getting your ass kicked, that's what's happening. But we're right and we're just. Yeah, well, you're getting your ass kicked. Okay? It just is. Okay? There's no morality to it. You better come up with a new strategy if you're getting whooped. So don't bet against what's happening because you believe you're right and you're just. What kind of idiot would buy a stock at 35 times earnings? Well, the idiot that thinks it's going to go to 45 times earnings. Okay? And if that's what's happening, that is what is happening. All right. Let me cash out of my crypto. It's converted to cash. Now I'm like, give me my cash. Continue. Move it to my bank account, please. Yay! Hey, you can't eat your Bitcoin. You can eat your USD, but I prefer to convert my USD to energy. You know, one of my favorite parts of the oil trading course is comparing carbohydrates to hydrocarbons. They're the same thing. Energy. So you consume food and convert it into carbohydrates, but then we take hydrocarbons out of the ground, which used to be leaves and animals, and we burn it for energy. Either way, we're burning it for energy, whether it's inside your stomach and your blood system and inside your cell walls or inside your what do you call them? Cylinders. Inside your cylinders, right? You're burning it there for energy, right? So anyways. How many pips is an average day trade? for a dollar. You're asking me what the average daily range is? Or are you talking about what a day trade is? I can answer that. I think what you're saying is, if you're day trading, what are you going for, right? How many pips are you going for? All right, let me answer this, because it's in the training course. So I go to the video training course, and do I have it labeled this way? There you go. Day trading, 33 to 99 pips. The quirky market pattern I've used for day trading since 2004. How to day trade, part 1. Part 1 is 55 minutes long. Oh, you're type 1? Yeah, I'm a T2, baby. I'm a T2. Yeah, David, if you can't get 99 pips on a trade, you're a scalper. I mean, dude, 99 pips is yeah, a baby trade. A baby trade. Yeah. So anyways, yeah, a pissy little day trade. You should pick up 99 pips. I got 99 problems, but a pip ain't one. Is 33 pips enough? No, it's a joke. 33 pips. You wake out of bed in the morning and you're like, God, please help me get 33 pips. No, there's barely any analysis in there. Okay? No, the stop is 33 pips. So when we go back to that, the 33.99 in the lesson here, day trading 33 to 99, that's a 33 OCO. So if you're doing like a 1530, I don't know what risk reward ratio you're setting up. But if you're going for 30 pips and you do a 2-to-1, then your stop is 15. Like, dude, that's a joke. That's embarrassing. Like, a 15 pip stop? What the hell are you so scared for? Right, David? Like, we need to fix that. Like, okay, so if you're just going to throw down a ridiculous little trade and try to pick up one candle, okay, I guess you're bored. But the scary part of that is, what if you put real money on that? Like, you're like, because it's not worth anything, you have to put in a big lot size. But the likelihood of you losing money on a 15 pip stop is almost 100%. Like, and you never grow, you never compound. Like, oh my God, that sounds terrible. Right? That's a horrible, what you're doing now, and I'm not picking on you, David. I am trying to make a point. You're making the exact same mistake that 95% of other retail traders make, and we know they all fail. Like, you're choosing a strategy known by all to almost certainly fail. So you got it ass backwards. I mean, look, if you're doing something that fails 95% of the time, you might do better just doing the opposite. So what's the opposite? Have a smaller lot size, have a bigger stop, and let your winners run beyond 30 pips. And instead of knee-jerk reactions responding to headline news, instead you spend hours, days, and even weeks setting up your trades in advance. And I think if you do all of that, your trading will certainly be different. Will it be better? Well, I don't know your decision-making process. But if you just did the opposite, plan all your trades in advance, like, you don't take a trade today unless you planned it yesterday. Simple rule. You don't make up a trade plan today. What you're doing today is planning tomorrow. Like, just no, retail traders don't do that. Let's try that. Plan all your trades at least 1 day in advance. Second thing is cut your lot size, not by 50%, cut your lot size by 66%. And then triple your stop loss. But because you triple your stop loss, triple your target. So if you used to go for 15.30, okay, do 40.90, 45.90. Oh, well, you end up getting the same, but you're actually likely to survive. You can just get unlucky. You can turn your head and cough. Boom. It moves 15 pips and you take a loss. You're not likely to get unlucky on 50 pips. You're probably wrong on 50 pips. And therefore, you probably should get out of the trade. You see? There's no luck. We're trying to remove the luck. Because the only luck you're going to get in Forex is bad luck. Okay? Now, Jordan says, hey, looking at the higher time frames, by the way, I'll skip ahead so you can see some
and
of
it's
this.
still probably going to be bearish.
See, like,
So
we're making really nice
wick
definitions
tells
here.
us, and you're trying to sell high. Average, some of your trades are going to be 3-to-1. That's how I want you to think. This is why it starts the coffee maker, right? And then goes over and boots up the computer. And that.
All right. So anywho, very neat. I think I'll just leave it at there, right? And now Jordan says a higher time frame. So I spend most of my time on the 4 hour. And I spend, and then I'll switch over, check the daily, go back to the 4. Check the daily, go back to the 4. Check the daily, go back to the 4. And when I've made a decision, we call that strategy. Okay? So let's say I wanted to sell on that 55 EMA on the daily. Okay, good. That's aggressive on the 4 hour. I need to note that. But now I drop into here. And I know, for example, strategically, and I'll do this in a dark blue to represent the daily 55. Okay? Cool. So now what I'm going to do on this 15-minute chart is say, when this 15-minute chart turns bearish, then I'm going to sell and ride the daily, the 1 day 55 as resistance. The 1D55. That is how I trade. So should I sell? Well, we're on the daily 55. It is resistance. By definition, it's dynamic resistance. Okay, great. Do I sell now? No, because even on a 15-minute chart, this is bullish. I can't sell it now. So now I need to wait for the 15-minute to roll over. That might take 2 or 3 hours. Yeah, well, I'm not desperate. I'm not in a hurry. I'm not trying to outsmart anybody. I'm trying to lower my risk and pick up a reward that's actually likely. I'm patient. I'm disciplined. I plan all the trades in advance. I might have to wait 3 or 4 or 5 hours for this. This might be a New York close trade. Cool. But if I'm right, it's going to probably drop for a week. So what do I care? Versus running around like a chicken with its head cut off, making a bloody mess of everything. Oh my God, the headline CPI, the CPI, the CPI, the CPI. I'm planning the rest of the quarter. I'm planning the rest of the quarter. Okay? Angel says, I'm confused with when to use the 4-hour 21 or the hourly 55. It's just, look, the daily 55 is there. It's factual. That's it. So if it acts as resistance and if it holds, then I trade it. It's strategic. And the daily is more powerful than the 4-hour. The 4-hour is more powerful than the 1 hour, so on and so forth. So it's really, if the daily says we're at resistance and might head down, that's what the daily 55 says. But the 4-hour 21 is ripper up. Well, I don't have congruency, so I certainly wouldn't sell that. So it's more like if this reverses, it's going to do something like I just drew, and therefore my ambush is set right here. And maybe by 5 p.m., if something like this happened, I'm probably right. It probably is important. And we have a big up day in the gold market, followed by a down week. I'm not trying to pick the top either. I'm just saying there's a daily 55 right there. And if that holds, then this will probably drop down to this level again. And we just have ourselves at a range. So all I did was sell at the higher bounds of the range. Here's the middle of the range. Okay, so that's all I'm doing. If you want to look at it that way, I'm confirming with technical analysis the range. And I end up selling at the top of the range. Sweet. Easy peasy lemon squeezy. So sell at 1950, target 1900. Couldn't be simpler. I don't know if it's right, but technical analysis will confirm or deny that hypothesis. So it's an if-then statement. If it rolls over there, then I have a reasonable understanding of why. So if it rolls over here, I'm going to make at least $50, which is pretty decent on gold. It's an okay trade. Okay. That's how you use your small time frame. So for those that are only trading this, what happens on this time frame, and I love the 15-minute chart. The thing is, it's only tactical. Okay? It's only tactical. And I traded many years only using the 15-minute chart, and this is what I found. It goes up, it goes down, it goes up, everything's right as rain. And then for some unknown reason, it just stops. And I don't know. I didn't know all those years. So maybe I bought here. Great. It's great. Then I buy another one. That's great. And then I buy another one. That's great. Right? And then I buy another one and it collapses. And I'm like, what the? And then it drops. And then I'm like, so I lose money on this one. I break even on this one. Now what the hell? I make almost nothing on this one. And the only money I make here is on that one. But I've lost 30 to 50% of it because I didn't know that this was coming. What was I missing? The daily chart, son, where the big boys play. One of the things we were talking about in the day trading group last night in the Stop Looking Correct session was how institutional traders like hedge funds, how they think and how they plan their trades. And they think not just days in advance, weeks and months to set up trades. And they may have to wait 2 weeks to get into a trade, but when they take it, they're going to make more than 33 pips, David. Okay? Institutional traders don't think, what's going to happen for the next 90 minutes? They don't think that way. Okay? They're thinking, oh, this was a half decent week. versus, where they are in the month. So they're thinking probably 2 or 3 months in advance, breaking things down week by week by week. Yes, they use smaller time frames to look at tactically how to position or reposition inside of the new week in context of the new month and of the quarter. So you might say you're a bull this quarter. So you want to buy dips this quarter. Okay. What happened last week? What do you think is going to happen next week? And where do you think we'll be at the end of the month, end of the quarter? But you don't show up on New York like, hey, what's up, fellas? Oh, we're going to trade a 5-8 cross on a 5-minute chart and go for 22 pips. No. And Richard says they have stop losses of 200 pips or maybe more, right? Do you know why, Richard? Why is that? And this will also goes to my do the opposite speech. Because they're using significantly less leverage than you. You meaning us. Okay? So here's the thing, and this is what gets me about retail traders, is they barely know what they're doing, technically. Fundamentally, almost zero knowledge. Very, very, very short-term volatility trading. Now, keep in mind, institutional investors are avoiding volatility, neutralizing volatility. Retail traders love it. They threw money down on a CPI scalp. That, institutional investors avoid that. But anyways, so they barely know technical analysis. They know nothing about fundamentals. Okay? They don't have trade plans set up in advance. Their tights are super close. Their limits are super close. They don't compound. They don't let the winners run. And on top of that, they use insane levels of leverage. You couldn't design a dumber way to do it. I mean, honestly, if you really thought about that idea, it's everything backwards. And I think the only ones that the 5% survive figure that out really quickly before they blow up their account. And everyone else just blows up their account. And every single day for 20 years, I'm trying to teach you to be patient, disciplined, thoughtful, teaching you how to do your research, to create a bias and not have opinions, to use technical analysis to confirm and deny your fundamentally based biases, have congruency between economic fundamentals and market realities, but also through different time frames. Think of it. In 2008, I launched a book. In 2007, I wrote a book called Strategic and Tactical Forex Trading, where I separate, just think about that, strategy first. If you don't have a strategy, you will lose all your money. If you just show up every day and wing it, you will lose all your money. So stop doing that. Open up a demo account and just trade on a demo account and learn your fundamentals. Once you have strategy, which is fundamental analysis of macroeconomic data and the appreciation of higher time frame charts. So you can answer the question, what should I be doing? Should I be buying this asset class or selling it? If you can't figure that out, you're not a market participant. You're a liquidity event. Okay? Once you get that down, then technical analysis, which is, by the way, just statistical analysis of price time data sets. That's all you're doing with technical analysis. You're not trading moving average crossovers and stuff. Those are just things of measurements. MACD, what's MACD doing? MACD is just measuring what's going on with the moving averages. Stokes is just measuring what's going on with the candles. So what is actually going on? Statistical analysis of the data set, price and time. So that you want to do standard deviation, boom, there's standard deviation. Great. That should confirm or deny the opportunities in front of you that are fundamentally based using macroeconomic analysis and long-term charts. So, will this fall? I don't know. But we do know that that is some level of resistance. I don't think it's a big level, but it is a level. Okay? If you're buying there, you're weak. I mean, you might make money and all that. Who cares? You're taking a risky trade, and if you take a risky trade and you only make 20 or 30 pips on it, dude, it's embarrassing. Your mother would be embarrassed. Okay? Four bullets, 6 chambers, $1 million. Too risky, unless you're not worth anything. So we sit here and say, it's not an opportune time to buy. Do you understand that part? The very least, even if you're a bull, look how long since July 1st, since Canada Day, which actually makes me chuckle. Since Canada Day, this has been going up. And now you want to buy it at the top of the range on daily resistance. Really? That's what your strategy is? No, you don't have a strategy. By the way, I'm not pissing on anybody's shoes here. I am trying to make an emotional appeal to your psyche, though. So I'm not talking down on you, even though it sounds like I'm not. I'm doing this out of love and respect. And I'm also telling you how difficult this is. But I'm trying to break through psychologically. And the way to do that is through emotions. Otherwise, you'll never remember. So what's the point? Okay? So what I'm saying is, if you don't see the daily resistance, you don't know what you're doing. And whether you make money or not is besides the point. It's the level of risk you're taking. And if you take a high level of risk and then only get a small reward, then it's really like terrible. You're taking the risk and you're not even being compensated for it. And you're like, what risk? I don't see this. This is a 15-minute chart. This is going to go up for, like, gee whiz. It's not going to work on the long run. I don't care if you make money on this or not. It's not going to work on the long run. So instead we go, this is not an ideal time for a bull to buy. But if the bulls take profit soon, at some point it might become an opportune time for bears to sell. So it's kind of like bulls down here probably should be thinking about taking profit high. Buy low, sell high. And bears might be waiting for the lower high, lower low. Okay? That's what I'm trying to appeal to in your psyche. Okay? So we go back and we change this setup. We can do daily confluence now. And now I throw it down and I'm like, seriously? You want to trade gold after CPI on a daily dynamic resistance level, on the weekly aggressive target, and on the greatest selling pivot of the month, and now you want to buy. Oh my God. I don't think it's going to work out. That would be my guess. Whatever you're doing, I don't think it's going to work out. So either, if you're that person, I don't want to help you improve your trading. I want to destroy everything that you're doing and build you up, because I can't improve something that doesn't make any logical sense. You see? I can't improve your trading if that's what you're doing. I have to radically change everything about what you do. And maybe have you do almost the opposite. But that doesn't work too, because that actually isn't an ideal place to sell. It's an ideal place for bulls to take profit. So I really just have to build you up. The opposite isn't better either, but maybe opposite thinking. So if you were so bold along the way to buy these dips, if I was your consultant, if you hired me as a hedge fund manager and I'm your foreign exchange consultant, I would say there's a high probability of profit taking at exactly this price. So I would say extreme caution right now. Well, technically extreme caution doesn't happen until a little higher, but definitely red flag, shields up, red alert. Risk is exponentially increasing. And if you can't recognize that, you're going to make mistakes. But I don't want to come across like I know what's going to happen. It might do this. And you're like, see, Wayne, look, I'm right and you're wrong. I am not wrong. Even if it goes up, I am not wrong. Those are extremely risky pips. So if you do it and then this compounds, you're going to take extreme risk. And then going back to David's, I think, question, let's say to make 33 pips on this, you're going to take extreme risk and only pick up 33 pips. I think it's not even worth it monetarily. And then I'm not saying this is you, David, but I'm going to leverage your comment for the sake of education. You look at this and say, well, it's not worth the 33 pips, so I'll jack up my lot size from 1 lot to maybe 3 lots. So you're going to take 3 times the risk for a pathetic, tiny little reward at the worst time possible. I'm like, I just don't get it. I just don't get it. It doesn't make any, I am incapable of doing it. That's how ingrained it is into me after doing this for 20 years. I am not capable of doing it. It goes against my reason for being. But you do you. Right? You do you. My way isn't the only way, but it's the only way I trade. So I don't want to come across as I'm smarter or better, or I'm a genius, or I see the future. And that's the exact opposite message I'm trying to get or give. I'm trying to teach you how to do your own research so you can be an independent thinker. So when you see somebody on television talk about gold or Bitcoin or the stock market or the economy, you immediately have a treasure trove of facts. And you listen and you go, really? That's what they think? How do they get to that? And over time, you'll start to have doubts about these billion-dollar traders and massive banks and famous economists. And they give you their narrative, and you're like, dude, I think these guys are either spinning a web of stories or they actually believe this crap. But you know, because you have the same access to information as they do, that they're not seeing reality. And it's so common now, it's weird. And I don't think it's purposeful. I think what happens is a bank, let's say, develops a culture inside the bank of, let's say, risk on or risk off, aggressive or conservative. And irregardless, what happens is the CEO gets up, the chief economist gets up, the chief strategist gets up, and they all say, everything's terrible, everything's terrible, everything's terrible. And all of a sudden, all the file and ranks and all the subordinates to these leaders, and these leaders are just rehashing the same crap to each other so they feel smart. And now the minions, it goes all the way down to the minions, and suddenly the whole bank, based on their internal culture, all interpret the data the same way. It's bearish. And some other bank across the street has the exact opposite scenario. So Goldman Sachs is like, there's no recession. It ain't going to happen, right? But I think it's Morgan Stanley, who's a Wilson. Anyways, I think he's like, it's all terrible. And then Goldman Sachs is, it's all beautiful. And you're like, what the heck's going on here? The point I'm trying to make is if you just listen to one, there's a 50% chance you're wrong. So there's 3 bullets in the chamber, 3 empty chambers. Are you going to pull the trigger? I don't like those odds. So can you be smarter than Goldman Sachs? No. Can you be smarter than Morgan Stanley? No. Can you be smarter than Merrill Lynch or some hedge fund? No. But you can do your own work and stand on your own feet. And you say, I can see that, or how did they get there? Because if you don't stand for something, you will fall for anything. And if you can't make a decision for bias, which is just simple strategy, then you don't create any value. You're not invaluable, you're valueless. You just work for your time and you make a bunch of trades and you flip this and flip, and you make some money today, lose some money tomorrow. And 5 years later, you're trading water at best. So what's the point? What's the point of that? But when I talk to hedge funds, when I talk to bankers, when I talk to high or ultra high net worth individuals, they'll ask me a question like, oh my God, what do you think about the Fed? Where are interest rates going? What about 2024? When is there going to be a recession? Is there going to be a recession? Now you have to be able to think and talk ahead of 33 pips on a euro dollar or pound dollar. There's no value in that. Nobody even cares. And even on the retail side, you only care, but then you don't make any money. So then you jack up your leverage. And then you're like, but if I jack up my leverage, I'm worried about losing money. So now I have a super tight stop. And it's horrible. It's the worst possible strategy devised by man or woman. And I saw that 20 years ago, 19 years ago, 18, 17, 16, 15, 14 years ago. Retail traders were still losing on that strategy. 14, 13, 12, 11, 10, 9 years ago, millions of retail traders were trading like that, and they all lost their money. 9 years ago, 8 years ago, 7 years ago, 6 years ago. We're talking millions of people have tested out the strategy that you might actually be doing right now, and they all have lost money, except for the 5% that probably figured it out and switched to something that actually makes sense. But if you actually do the math, risk reward, percentage win, percentage loss, risk adjusted performance, you do all of that, you're like, the failing strategy that's been proven at least 1 million times over to fail. It's a proven failed strategy, or it's proven that the strategy fails. Okay? So if it never made sense mathematically, and it doesn't make sense when you look at the masses of millions of traders, then at the very least, I propose you look at your trading differently. And let me into your heart, let me in your mind. I will push you in towards fundamentals more. There's no doubt I'm going to educate you on fundamental analysis and macroeconomics. You're going to learn a lot about banking and central banks. You're going to learn a lot about inflation and interest rates. You're going to learn a lot about GDP. In my economics course, I tie GDP to human existence, to self-worth, to dignity. And when you understand what these numbers mean, not intellectually like, oh, I understand 3.4 is better than 2.8. No, when you tie it to your human existence, you will fully understand what we're trading. It's real. This is all real. These are not gobbledygook numbers. We're measuring human existence on the planet, and we're trying to deploy capital to create productivity. We're not just trading lines on a chart. Come on, it's not a video game. We're deploying capital. It's important. The world needs this. The world needs you. And the better you get and the more you do this, the less you're going to have faith in other financial advisors, wealth advisors, bankers, bank traders, hedge funds. You're going to look and question all of this and say, the world needs something better. And then it'll dawn on you. That something better is you. And that's what I'm trying to build. So join my army. $88 a year. I'm trying to change your life. Forget about making you a better trader. I'm trying to change your life. Give me a shot, dude. I will preach the truth. It's not $1,000. So anyways, those that know me know I work day and night to help and help change. Not improve your trading, change your trading. Change the way you think about trading, change the methodology to prepare for trading, change the way you actually trade. It's a revolution. It's not a marginal improvement. And if that doesn't appeal to you, good luck. There's a million other people that have tried to trade your way and it doesn't work. And I know that you know. And now you know that I know that you know. So therefore, it's common knowledge. Everybody knows this. So let's change, huh? Let's change. Change it. Come on, let's do it. Okay? I've been doing this for 20 years. You could probably learn something valuable from me. I don't know. Risk the $88. I'm not buying a Lamborghini with your $88. That's not the point. Cool. Peace on earth. May the pips be with you. May your profits be above average. Have a great day. I'll see you when I see you.